Hello and good evening to this week's weekly analysis webinar, the Elliott Wave Weekly Market Analysis Webinar. Thank you all for joining. We're going to be looking at the Forex market using the Elliott Wave strategy for the week ahead. It's been a great week. It's been a profitable week. I said last week that the market is on a trend. Now it's trending. That's when we make money. We make money on a trending market. We don't make money on a corrective market. And the market trends almost, you could call it 70–80% of the time. So it's mostly in correction. So you need to know when to trade and when not to trade. So in our group, the first 2 weeks of January, we were not trading much, just a few trades there and there. And I mentioned that we just hitting ones and twos. So we were not really hitting the fours and the sixes like in a cricket match. So these past 2 weeks now, we've been hitting the fours and the sixes. It's been hook, lines, and sinkers for the last 2 weeks. So I'm just going to give you a trade summary of some of the trades that we've been looking at, some of which that we've been taking in our groups. But all of these trades we've discussed in the weekly outlook. So one of the trades that we've been discussing is the EURJPY. Obviously, this is just a recap of what we've done in the last week or two. We are just going to do a recap on these ones, but I'm going to go into the analysis as to where to from here as well. So this is the setup that we took on EURJPY on Tuesday. So you can see that we had this correction that set up nicely with a flag there, and then we took it there. Okay, so that gave us a very quick 240 pips, as you can see. So this was the before, this was the after. And you can see how well we take these trades. Look at the stop loss, very small. I mean, taking about a 40 pip stop loss for 240 pips. That is the kind of strategy that we use there. So that's EURJPY, right? So and then this EURAUD. If you did not take this trade, then there's no point in you watching these webinars. I did a special webinar on Wednesday, detailing from top down from the whole cycle of EURAUD, and I came and I gave you this trade. So look at this one, how it played out. Quick 400 pips there. As you can see, it went straight to the pip. It's confirming to the analysis exactly. So that was EURAUD, about 400 pips that we got there. Right, so Swiss franc, like all the yen pairs, has been very consistent. We got a lot of money on the yen pairs reversal to the upside. You can see here we had a setup for upside. This was the first trade that we took on Swiss chief. We actually took two trades, as you can see. The first one we took over there, and there was the second one we took over there. You can see it on this screen. The second one, where we took the second one. So this was the first one that I show you in the first screen. We took it over there. Got this one. You can see that euro, it hit the target there for 120 pips and another 120 pips for the second entry. So we had two trades running from this one here. So this you can call it double pip. It was running in double trades. So that's about 350, 400 pips odd on this one on chief. All right, US dollar JPY, actually the before, this was the before all of these ones were taken on Tuesday. You can see impulse correction. Look at the stop loss, very, very close for 120 pips, easy. As you can see, there was 120 pips crashing through the TP. Pound New Zealand, this one was not really going well. We don't like these ones that don't move impulsively. Actually, we did not. We as you can see here, this one actually hit our stop loss before it went. So this was the trade that hit a stop. So we don't win everything, but we knew where the direction was, what the direction was, the direction that it was supposed to go. But that's okay. That's part of trading. We don't win 100%. We just make sure that when we win big. Okay, so one of the other trades that we took was pound, euro pound. As you can see here, we had an impulse. We knew that we were going to get a correction. As you can see on the next slide, you'll see that we actually, let's go back there again. Let's go to the euro pound. So this is it here. So we knew that we were going to get a correction. I'm trying to find the other pair. Okay, so you can see there. So the first one was this one here. We wanted it to give us a corrective structure here, which it did on the second one. It keeps running away now. Let's just go straight into it. So there we go. We wanted the correction, and it gave us the correction, as you can see there. All of these trades, very painless. See, very painless. Stop loss, very painless. Not one of those that will stay in the stop loss before going into profit, if they do. So that was EURJPY. This was Swiss franc. Swiss franc also hit a stop loss, right? But we still want to buy this one. You see here, this is where we were trying. We didn't take this trade because it did not trigger. We wanted it to get out of this flag. So for us to take it. So you can see here, this was our entry, which it did not get to our entry, did not break out of the flag. But now it is still doing the same thing. We want it to correct again. When it does, we are buying it again. All right, so that is, do we still have more? Let's see. All right, so this one is US dollar, South African rand. We bought it there. It's about 70 pips up, as you can see here now. We are long on this one. Okay, New Zealand. This one, the Euro New Zealand was an interesting one. So you can see we had a first entry there. We actually had two entries here. And we had the second entry, as you can see. Let's use this. So we had that first entry there. It came here and corrected like that. We took another second entry. So first one was here, second entry. So from here now we are running two trades on Euro New Zealand. As you can see here, it's going very well now, over 200 pips up, and now we're running double trades over there. This is just to show you that what we do here actually works. So gold, we wanted it to come and retest the top, but it did not go all the way. So it went up, came back down, and hit our stop. We're actually not, as you can see, there isn't a risk to reward slide here. So you can see that we did not give us a nice entry. That's okay. That was gold. And that's how we traded in the last week. So we've been hitting sixes, quick peeps, because we tried to get these impulsive moves. When you trade, you do not want to trade the corrective structures. You want to trade these big impulsive moves. You want these impulses. You want these impulses. All right. So that's how we did in the last week. There's a couple of other trades also that we took. Obviously, I'm just giving you a highlight of some of the big ones that we took here. So very good trades in the last week. So the market is still in the trend. We still have some good setups to look at in the week ahead. So now let's go back into the market and start our analysis. All right. So we're going to start with our Euro US dollar and the dollar index. See how this chart has been progressing. Thanks, Dukes. All right, so let's get into the business of the day. So that was a recap to show you that what we're doing here on a weekly basis, how we actually take those trades in our group. Right, so now let's look at for the next week, Euro US dollar correlation with the dollar index. I like this chart because it's very clear. And every time I play it, you can just see the correlation playing out, everything playing out as we analyze each and every week. All right, so you all know I do this every single week when we start, that this was our wave 3. This was 1, 2, 3, 4, wave 4. 1, 2, 3, wave 4 on the DXY. And then we wanted the wave 5, which is now playing out. And I'll show you that this has a potential to go much higher than just where we are right now. All right, so this is where we are today. We had this wave 5 coming from right at the swing low. There's a swing low coming from right at the bottom. There's a swing high coming from right at the top. and then it was corrected with the 1, 2, 3 waves, WXY, to give us a wave 4. As you see there, let's get this one. You can see there's a wave 4 there, then there's a wave 4 here. They are inversely correlated, so whatever Euro does, the DXY does the opposite, and vice versa. So where are we today? So today we had this move which trended in 3 waves. Similarly here, we had this move trending in 3 waves here. Okay. So what we want to look at is where this is going. We have 1, 2, 3 there. We have 1, 2. Where are we? Let me just write that. Just want to get the correlation right there. Let's get it right. All right, so this is where we are. All right, so you have 3 waves in this area. Right, so we need to see how this plays out. How this plays out here. So it's trending in 3 waves, not necessarily in 5. So we want to see what is happening at this point to see, are we going down, are we going up on Euro or the DXY, either way. Okay, so let me play it again so it can play fully. And then we get into the specific charts. All right, so before we do that, so notice something here. Here we've got this 1, 2 here. You've got this 1, 2 here. Incomplete. So what I'm expecting on both is that this will come down here. This was actually the analysis that we had for NFP, because we had this move up, so we wanted this to come down during NFP. So during the daily mentorship webinar where we discussed the mentorship, we were looking for Euro to come down and the DXY to come up. That is why we've bought the yen pairs, right? So, but that down move may not be long-lived, because this could just be this correction and then it moves up. It could just be this correction and then we get a further move to the downside. All right, so let's get back into the Euro US dollar chart. I'm not going to go to the DXY as well, because whatever we're discussing on the Euro US dollar, it's exactly the inverse on the DXY. So let's look at the Euro now. Okay. So looking at the Euro, I'm going to switch everything off here. So we just look at the patterns. Euro US dollar, we're right at the top here. We've got 1, 2, 3. We've got 1, 2. This is where we were during NFP. And we said, if we're actually correcting here the night before, then we said, if this has not tagged this level before NFP, we actually wanted it to make a spike to tag and then come down. So whatever Euro US dollar does, we wanted it to give us a move down, which it did, and we sold it here. But as you can see, it retraced that whole move. But that's not really a problem, because what we're looking at here is possibly a 3-3 impulse flat correction, and then this move can go on. All right, so there is a possibility that Euro may have a longer term upside, and this is what makes us think that Euro US dollar may have an even bigger move to the upside. And the reason is this one here. So you can see here, this was the long term downside from the swing high coming down to the swing low here. So this is the start of the upswing. So this swing is going something like this. So there's a possibility that this swing can actually be your ABC all the way to 132, and this will no longer be a wave 5. That is why every continuation pattern, we're going to be buying it. So this may not be that wave 3, it may just be an A, and then you have your 1, 2, 3, 4, 5 here on this swing here. And then you get your B. As you can see, that wave 4 that we've been analyzing as wave 4 can just be a wave B. And then this will keep giving us lower time frame correction for moves up all the way up to 132.34. Okay, so there's that possibility. That is if it does not drop here. And last week I indicated that we are not, you don't even have divergence there between this and that, which is what we expect for a wave between wave 3 and 4. So you don't have it. So there's a possibility that this will just be continuation patterns to the upside on Euro US dollar. Okay, so we expect the same on the DXY, that dollar weakness prevails. All right, so we've had the short-term move on the yen pairs to the upside, indicating that the DXY also is on the upside. All right, so let's go through the rest of the US dollar pairs, US dollar CAD. So this pair is actually very interesting. I've been trying to understand this structure that happened here at the top, because for me, if you're an Elliott Wave trader and you've analyzed something and there's a pattern that you did not analyze correctly, or it did not play out as you've analyzed, you must understand why, or it must have either played out a different pattern. So here I've been trying to look at this. If you just remember, let me just show the whole chart here. This is the daily. Here's the daily on US dollar CAD. So you can see the big A, B, and then a C move. And then from here, we're having this reversal here. So this is the 1, 2, 3 here. So, but there's this structure that is giving me a headache. All right, so let's look at that, but we can still trade this. And this is what I'm thinking here happened. Something like a truncation on a wave C. I've been doing a bit of research on that. 1, 2, 3. That's what I'm looking at. There's no other way to explain this except for a truncated wave C, because this is what I'm looking at. So if this was your A in this degree, or I'm just calling it an A for ease of reference, right? So it's not necessarily an A, you can call it a W because it's the 1, 2, 3 waves. Right, so this will be your B. Then this was supposed to be maybe another move like this, giving you a wave C. This is why I was even trying to buy this a couple of weeks back. So the only explanation for this is that you've got a truncated wave C. So the wave C failed to break the wave A. Right, so this move here does not even qualify to be a zigzag according to our rules. So that is the only explanation. You've got a truncated wave C. So you've got your ABC there, because this swing actually starts here. I even looked at the possibility of this being a 1, 2, but this has already broken the start of wave 1, if this was going to be a wave 1. So that it's not valid. So you see there's different alternatives there which are not playing out, and all of them are eliminated except for a truncation in wave C. It fails to go beyond wave C, wave A, as expected by the rules, and it does not qualify to be a zigzag either. Because if this was a zigzag, this would have been something like this, 1, 2, and then it goes. Right, so even if this zigzag was here, the 1,61 extension of A would have been valid, ABC. But right now, it's only up to here, does not even break beyond A. So that is a truncated wave C. Right. So now, we're having this move to the downside. Right, so I was discussing with my group that we've been talking about this pattern quite a lot. So that's the pattern where you've got a sharp move down and then this thing slows down. So we've been calling this pattern a V pattern or a V wave or something like that. But actually, when you're a waver, you must always be doing research. I've been doing a research on this pattern, and it's actually not a new pattern. So we cannot take credit for it. It actually forms within the Elliott wave structure. So you've got an impulsive move here. You've got another. Let's do this in a different degree. You've got an A. You've got B. And when we look at the personality of these patterns, the retracements B are usually a bit sharp. But what you have there is still a 3-wave move. It's just a zigzag that is confined in a channel. So this is still a zigzag, ABC, as you can see here. And it's not even a diagonal because this is a channel. So it's still a zigzag that is confined in a wave C. So you do find these patterns that goes with even 5 waves in a channel. So all we could see was that we've got an impulse and then maybe a retracement and then it pulls down. Sometimes just an impulse and then it just slows down. But it is still part of the Elliott wave structure. All right, so if we were looking at this like that, this will be a bigger W in red, or rather let me use blue color. Let me use a blue color here. ABC, so this is our truncated wave C. And if that is our wave C, then this will be a W. And this W is representing the ABC truncated one. Okay, so this will be the X move representing this ABC internal here. Okay, right. So from here, what do we expect? Naturally, from this pattern, we've been trading this pattern very profitably. We're doing a lot of research on it, and it's working very, very profitably. US dollar CAD, we didn't take it on our group because we've been taking already US dollar JPY, which is almost which is basically in correlation. Okay, so what are we expecting? We're expecting at least a move to this level, but you need to wait for a correction here to this level. All right, so then you're going to get your W, you're going to get your X, then you're going to get your Y somewhere here. So this could be even a zigzag or something like flat correction, but more likely to be a zigzag. All right, so let's go through the rest of the yen pairs. The US dollar pairs, US dollar CHF. So US dollar CHF, I'm on the daily here now. It's doing that pattern impulse and it's slowing down here now. As you've seen on the recap, we're trying to buy US dollar CHF, and it is actually setting up nicely. There's that pattern. As you can see there, it's not just a random pattern. There's something significant there. You see this B wave that I'm talking about that pulls back sharply. Okay, and then you still have 1, 2, 3 here. Okay, this whole thing is a running flat there. Okay, so after that, you're getting this one here. So there's a possibility that this is a 1, 2, 3, a running flat. This is a 1, maybe another down before we actually go up. But if you get a flag here, then this means that this is actually completed. Those head and shoulders traders who like head and shoulders will even possibly say that they're getting something like this, and then they'll be calling this pattern the right shoulder. Okay, so you've got a left shoulder and the right shoulder. But I know why anybody who's training those kind of patterns are looking at them like that from the wave theory. All right, so I'll also take 2 minutes just to show you that why support and resistance works sometimes and sometimes it doesn't work. I must actually do a webinar on that. All right, so let me not be sidetracked. Let's focus on this. So this is what we'll be looking on this one. Looking for on US dollar CHF, either one more down to complete this WXY. Right, 1, 2, 3. Oh, sorry, I need to take this off here. One more down, which will be a WXY, and then it will give us another impulse. And it usually happens with these patterns. Now that we understand how it forms, then we can understand how many times it's going to go up and down. So there's a possibility for it to come down one more, but as you can see here, the MACD is already on the trend. It already started here. This is still going down, but the MACD has been long on an uptrend, as you can see. So it's just a matter of time before price also confirms the same thing. Whether it's going to be here or it's going to be here, but the bias is upside here for this one. So keep an eye on the flag. Don't miss the flag if you can buy the flag. I'm also looking to buy this one as well. So that's US dollar CHF, US dollar. I'm not going to do gold. So I don't do gold alone. I'll do it with US dollar JPY. So before I do gold, I'm going to do the rest. Right, so let me do gold and then we'll do USDJPY and gold at the same time. So let's go to that correlation part chart. Gold, US dollar JPY, these pairs are correlated. So we look at this one. Right, so you can see the correlation there. I'm going to play it as well and then we see where we are. We just go right to the end. So for detailed analysis on these pairs, you can just watch the previous webinars. So here on gold, we've got this reversal here. We've got the reversal on the US dollar JPY as well. So the question is whether this is going to be the reversal. So when you get a corrective structure like this, you need to sell it to that level. When you get a corrective structure like this, you need to buy it to that level and watch how this is going to play out, because there's a possibility that this is only a 3-wave pullback, giving us a deep pullback, 3-wave pullback on US dollar JPY before we continue the move lower, before we continue the move higher. Okay, so we need to keep an eye on this one. So gold is a commodity, obviously, and then Australian US dollar is one of the commodity driven countries. So let's look at AUD US dollar correlation with gold as well. Okay, so that's what we're going to be looking at for on gold. So the structure currently is like this. So we've got 1, 2, 3, 1, 2, 3. That's 1, 2, 3, 1, 2, 3. So we'll be anticipating another 1, 2, 3 here. So that will be possibly the 3-wave pullback that we get. Otherwise, if this keeps correcting and coming down like this, then we may be getting a reversal. But my preferred alternative right now is the 3-wave pullback. Because if you look at gold on the 4-hour, we have not had a deeper pullback since the beginning here. No real correction. So this could be the correction that we are looking for up to this level. So we need to keep an eye, but do not miss it thinking that it's gonna reverse. If it gives you a setup to sell like this here, you take it. Obviously, for here it needs to give you a setup, because you can see here you've got 1, 2, 3 here. So this will not just go in a straight line as well. It will give you a 1, 2, 3 as well. It will give you a 1, 2, 3, similar to what it did here. So we're gonna see if it gives you that 1, 2, 3, and it does this, then we know that we are ready to come down here, and this correction will be even deeper. Okay, so that's how we're gonna be looking at this one. US dollar JPY. Let's go to US dollar JPY. US dollar JPY. All right, so this one has reversed. So the trade for next week on this one, we're already on this pair from right at the bottom here. So if you want to ride onto this one, wait for a bit of a deeper correction, or any corrective structure, you need to buy it to target that level. Okay, and actually not that level, it may even be this level initially. Okay, so we need to keep an eye, because the reason why I'm looking at that level is not because it's a major zone according to support and resistance traders, is because it's about the 50% of this one here, which could do this, which could do this, come do this, come do that, and come down, giving us a flat correction here. Okay, so I will show you on one of the webinars that I'm going to do which major zones when you're trading support and resistance are significant and which ones are not. Okay, because you find a lot of people just doing this, this is a major zone, and most of it is just coincidence, and I'll show you on one of the webinars that I'm going to do if I get a chance. All right, so we'll look for something like this. So let me just show you the trade here. We took US dollar JPY here. We sold it here. And we knew that when it drops here, it's going to give us a deep correction. This was last year in November when we sold this. It dropped, gave us this move here, and we wanted it to give us a deep correction. So this trade is also on TradingView. I can just show you that one. Let's see if I can find it. See if we can find it. So you see how we look at these patterns. Because if you just forecast and you don't see how the forecast play out, then it will not make sense. So you can see here, this was 14 November last year. This is where we were selling it. This is where we expected that it will have a deep correction, because nothing moves in a straight line. So we understand that the market moves in waves. It does not just go. So even if we know that it's coming from this point to this point, it was not just going to do that in a straight line. As you can see there, even though it does not play out exactly here, you can see that what I was essentially looking for was this to be a W here and then an X here. This is a 3-wave X, okay, before we got the move down here. As you can see here, one correction, and then we're getting this move. All right, so this could be your 1, this could be your 2, and then we could be going for a 3. So this corrective move here that we're getting now, the reversal, could be a wave 4, but it has not qualified to be a wave 4 yet. So we are not looking at it as a 1, 2, 3, 4 as yet. We're still looking for it as a 3-wave move. As a 1, 2, 3. Okay, so you see how we trade these things. So we knew from here that we are coming all the way down. All the way down. So there's something here as well. As you can see, this 1, 2, 3, 4 that I'm talking about, 1, 2. This that is supposed to be a wave 3 is only a 3-wave move. That's something that we teach in our class. What happens when your wave 3 is actually not in 5 waves? Because you can see here, this is not 5 waves. And you can see here, you've got a clear start of the swing. You've got a clear pullback, right? And now you are starting this move. Whether this move is going to be a wave 4, we need to see how it unfolds. Okay, so this will be the move that verifies the kind of swing that we have here. But we already have all of these pips from right here to here. As you can see, that's how we traded that one. Right, so that's US dollar JPY. Look for upside. It has already reached our 100 pip target. Now we're looking for pullback. If we get pullback, we're going to be entering again for a move up. Right, so Audi US dollar. Right, let's look at our Audi US dollar, switch off there. Let's go to the daily. All right. So you've got swing from right at the top coming all the way down there. So what you're getting here, I've said it so many times in these webinars, what you're getting here is a correction 1, 2, 3. So what are we anticipating? We're anticipating that you may get something like a X here. This is why now you've got this candle reversal here. So if this is going to be the move, then we are going to be reversing on Audi US dollar, at least to this level minimum. Right, so after that, anything can happen. You can get any pattern. This pattern can be a flat correction, can be expanding, regular, whatever correction it will be. We are still looking at this as a big correction, and we're only going to trade it to the downside when it breaks out of this channel. And you can see that this is a corrective channel. Right, so right now we've got an impulsive move down. Look for this trade, target this area here. Okay, so another one of the trades, very interesting trades on Audi US dollar that have been trading accurately, that I can show you from way back a year ago. And you'll see it's not just one move that we traded. This down move and this up move, we've traded like that. So look at this here. We were here. We actually got it a triangle here. I have not traded a triangle in a long time. I think this was the last time I traded a triangular structure last year, actually over a year ago, because this was December 2016, more than a year ago. So we got this move, we got this move. So we have now reached that target. So this is how wave analysis works. So you've got the move to the downside, did not quite tag here, and look what happens. Then it reaches the target after that. You can see the target has been reached there. As you can see, crashes it. Now this is the move that we are currently in to come and retest over there. This is the move that has now come here, and we are now anticipating that it will do something like this. Let's play the rest of it. As you can see, right to the pip, now it's forming this correction. So as the market plays out, we understand where it is going every single time, because we understand how the waves move, how the cycles behave, and what the sequence is, which is very important. Okay, because you can just come at any swing and see that you've got a corrective structure, but you don't know where in the sequence is, because what if this is the last corrective structure for a move down? You don't know that, because if you don't know the cycle, if you don't know the sequences, which is one of the things that I teach the guys in my course. All right, so that's Audi US dollar. What are we waiting for? Audi US dollar, this is the daily, so go to the lower time frame, look for something like this for corrective or for continuation patterns. to the downside. So this may be the similar move that you get on gold to the downside. So look at it like that. Audi, New Zealand, similar. Also a commodity-driven country. Right, so you've got what looks like a reversal here. I'm going to go to the 1 hour. All right, so you see that pattern again that we're talking about. It's squeezing, but we understand what it is doing. It's a 1, it's a 2, it's a 3. And then you pull back with a B. This B pulls back sharply. That's how this pattern has been behaving. And from there, it's a 1, it's a 2, it's a 3. Okay, this is a 3-wave move as well, this B. So it's a WXY. Even though we can see that this, the last pattern is squeezed into a channel or a wedge. All right, so this is why we got this move to the upside here. All right, so Euro New Zealand, we're coming down here. So if this is going to be a flat correction or a regular flat, which could be a regular flat, we need to watch it when it comes to this level, not because it's a major support zone or anything like that, because this is an area where it will be completing a flat correction, a regular flat. So we need to watch it when it comes to this level. So if you're going to be selling any corrective structure here, and this is a 1 hour, you need to be careful when you get to this level because it may do this. All right, similar to Euro US dollar. So that's New Zealand, pound US dollar has got a similar move. You can see here 1, 2, 3, 1, 2, 3, possibly a flat correction. So we'll be looking for this to come test this level first. Right. So when it breaks out of this correction, we're gonna be selling. You hold it and then you protect your profits when it comes to this level, because when it comes to this level, it may do this and reverse, and this will be a flat correction. So if you're selling here, be careful when it comes to this level. So that's pound. So we're gonna do the rest of the pound pairs. So today we're doing the pound before we do the yens. So that's pound US dollar. So that's all the dollar pairs. Now you're looking at the pound pairs. The pound pairs, pound chief. If you go to the daily, we've been looking for this channel to break down for the longest time. Let's switch everything off here. So this was that pattern again, as you can see. Let me not, I'm forcing it there. This was that pattern again there. You got your impulse, and then this thing starts slowing down here. Okay, so there's an impulse, and then you get this pullback, and then you get your 1, 2, 3, 1, 2. Clearly, there's going to be a 1, it's a 2, it's a 3. This one is a lower degree on this one. 1, 2, 3, 1, 2, 3. And then this last one here for the move down. So what do you do here? Corrective structure, you sell. Corrective structure, you sell. Okay, so you may get a deeper correction. Let's do it clear properly. At some point after a break here, you must be careful. You may get a deeper correction here. And when I say a deeper correction, I'm not talking about something that looks like this. This is just to show that it will be a correction. I'm not saying it's going to look something like this. This correction may look something like this. It may look something like this, like a normal flat correction before you go, or any kind of correction for that matter. All right, so if you miss it here, you don't miss it here as well. Right, so that's pound chief, pound CAD. We are in this trade still. I showed this one last week, and for simple reason, this one is the simplest one to trade. Swing high to swing low, correction A, B. What are we anticipating here? Every corrective structure is a continuation pattern all the way up to this level. We are very close to that level now, so it's quite risky to buy it at this level. You'll be buying too high, too expensive. Okay, let me go to the lower time frame, 4 hour. Okay, so similar to pound US dollar. We've got this move here. Any corrective structure, it looks like it's making a corrective structure there. When it makes the corrective structure, you keep buying. But remember, be careful when it gets to this level. It may give you a flat correction before it go, or it can just go if this is all the correction that it needed. Okay, but if the correct correction is going to be more complex and give you a flat, then it's going to give you this move here. All right, so that's how we're looking at pound CAD. Pound CHF, we've looked at pound JPY. This one has been tricky for us for the last couple of weeks. Let's look at pound JPY and go to the daily and show you the count that we've got. We've got a number of alternative counts on this one, and one of them is this one here. As you can see, we've been discussing this in our premium group. We've got about 3 views on this one, but all of them saying the same thing. Okay, so if this is your 1, 2, 3, 4 in a diagonal, we know that the wave 5 usually pushes out of the diagonal. So if this is the wave 5, then we'll be anticipating that we get a move here to the downside. And another alternative, which if I switch this one off, which one of our traders sent, is this one here, where this is actually an A, a B, and then this one actually becomes the diagonal. Okay, this one actually becomes the diagonal. Okay, it looks nice as well. So this will be the C wave in a diagonal. So we need to see if this one breaks out of this structure, get a correction, then we're gonna get a move to the downside here. Okay. Those are the 2 alternatives right now. I'm not looking for a new trade on pound JPY. So pound New Zealand. Let's look at pound New Zealand. Let's go to the 4-hour. Pound New Zealand, we're still looking for upside. As you can see, we are in this trade. Showed you this one, getting this corrective structure to come at least complete this move here. So if this is still going to continue to the upside, then you're still in the trade. And if you took it here, if you took it right at the bottom here, then it's you move your stop to break even when it gets to this level, right? So because there's a possibility for a regular flat like this. If I switch everything off here and clear this is the structure that you'll be looking for. 1, 2, that's your first target, because this can be a possibility, or this can be the possibility to just go straight like that. Okay, so where do we want it to end? If we just go to this one here, so pound has a chance to go all the way up to this level. And if it's going to go so far, it needs to give us a sideways correction. So there's a likelihood that it may give us this move, and we will get this move by it coming to this level, coming down here, and then getting the momentum to come to that level. Okay. All right. So that's pound New Zealand, pound Audi. Pound Audi. This one is close to the top. Close to the top. If it's going to give us this move. We are here now. We need to see if it's going to come to this level. So easy. Okay. So we need to see what happens when it comes to this level. And then if it starts correcting above here, then we know we're getting even more upside. And if we go to the daily, see if there's anything we can see here. Okay. So that's the move that it could possibly make. We get even more upside, or it can just go like that. That's pound Audi. All right. I think that's all the pound pairs. Now let's do all the yen pairs. We've already done US dollar JPY, Euro JPY. Right. So this one, this pair I like. I think you have been watching these webinars for a while now, and for the last 4 weeks, I have been saying I am not selling EURJPY. And the reason why I'm not selling EURJPY, I've shown this a couple of times. I'm going to show it again here. So every time you get a corrective, I said my target for EURJPY is 150, and this is why. This is very important to note. All right, so let's watch this one here. I need to change the chart. The broker that's offering this chart here, I need to take it to IDC chart. So it's to EURJPY. Then this one, you'll see why I am not looking to sell EURJPY anytime soon. I'm looking for IDC. So IDC charts have got data as far back as the 1970s. So it's nice to use those ones because it shows you a bigger picture and an overall cycle of the market. You see here from the swing high to swing low, what you're getting here, I've shown it so many times. What you get there, you get a correction that starts with an impulse, but that impulse does not get corrected. We get a blue down here, but the blue still does not get corrected. And as you can see here, this blue ends with a diagonal. So that is a motive wave still. It's not a corrective wave. It's one of those structures that we've been talking about. If you can see here, there's a big move to the downside. That's a A, that's a B that retraces with a sharp move. And then you've got a 1, 2, 3 waves there. Okay, so we're doing a lot of research on this structure and it's paying out profitably. Look what happens when it moves out of the structure. It breaks out with a strong move to the upside. Okay, so let's get that one off. We're still showing that we've got this move here and it is still not corrected even then. So we get now in the green degree, only in the green degree do we get this corrective structure here. Actually not in that degree. This green degree still needs to be corrected here as well. So I'm going to use now the red color for this one inside here. There's a 1. So I said I am looking for a big correction, something similar to this, for this to be taken to this level. Can you see what level this is? This is 150. Why am I looking for that level? Because that will possibly form for a flat correction. So if that is the 150 and this is there's a possibility that this will come down here and then it will go with a green. That is just one alternative. It will go with a green to retest the 200. So initially I'm targeting 200, but that's a couple of months forecasting, guys. All right, so I need to get some more space here. Let me make some more space. I didn't create enough space there. Let's put it there again. There we go. All right, so then we come retest this level here with the green. You see here the green is corrected with the red, but this green, all of it is correcting the blue. So when we retest that one, we'll be looking for this blue to do this here. Moving the whole chart now. I'm looking for the arrow. We'll be looking for the blue to do that. So you see the blue is only correcting the yellow. And then we're going to get a bigger move to the upside. And that will then complete this correction and the cycle overall. Then we get a bigger move to the downside because all of this will be nothing but just a corrective sideways move. Flat correction, a complex one. But where are we now today? Today we are only here. Every time I get a corrective structure, I'm selling it all the way to 150. And that is 1,300 pips away now. Okay, so that's the trade I showed you that we have taken a couple of weeks back, or not, this week actually. Here, show you. It's a couple of things here. I think this chart will show you why support and resistance is not accurate all the time. Let's get this one to play out there. Let me go down to the lower time frame, the daily. Let's go to the daily. All right, so that's just the higher time frame analysis there. I must go back to the original chart that has got my data on EURJPY. one with the FXCM. Okay. Right, so now we're back on this one. Okay, switch everything off here. So if you're a support and resistance trader, tell me why this level was not respected, because it looks very significant to me, right? So this one either is also not a significant level. A significant level will be this one here. Why? Because that will be the level that completes, if this is going to give us this move, it will be a move that completes the flat correction, the pattern. So the significant levels are the ones that completes the patterns. Right, spend a little bit more time on this one. Just that last thing. Notice something here. Here you get a move to the upside, you get this corrective structure. Right, so look at this one, the smaller one inside here. We've traded this one. Now remember, I'm gonna show you something here. This one, when I was buying here, when it did this is not the first time I buy when this thing is going down. See here, expanding flat, I was buying. And we had a couple of support and resistance traders selling here. And I'll show you why they were selling. I'll show you why they were selling. So if you're a support and resistance trader, before this plays out, I'm going to cut out here. You can actually cut out here. Right, so this is where we were when this was happening. So if you're a support and resistance trader, you would have your trend line like this if you know how to draw trend lines properly. Right, so your trend line will be something like this. Right, so this will break, then I say, okay, it has broken, now it's retesting. Let me put back. So this has now broken your trend line, you say it's retesting, and now you're getting ready to go down. So now you've got all your confirmations that you want. What happens? You're expecting this to go down, but it doesn't do that. Instead, because this is an expanding flat, this thing actually goes up. Okay, let's play that both those bars. You see, it goes, I am buying, you are selling. I am buying, you are selling. Same thing again here. I'm gonna pause it. Doesn't want to pause. Where do I pause it? Okay. I wanted to show this structure as well again here. That it's not the first time that every single time this thing moves down, we buy. So look at this one now here that we've discussed so many times in this group. 1, 2, 3. And I said, this is a X, 1, 2, 3. And then you get another 1, 2, 3, giving you a running flat here, a regular flat there, giving you a W, X, Y. You do not sell this structure, you buy it. You can see here we got all these moves to the upside. I'm still not selling. Look what happened on this structure now. This is the daily, so you'll see how I bought the 240 pips that played out in 2 days on this structure. Let's look at it now. And it played out real quick, so we got all of this move. This is the third one that I'm showing you now. Right, so what was I looking at here? I was looking at this as a 1, as a 2, as a 3. Okay, and then I looked at, this is exactly the same as the other, the last one I just showed. 1, 2, 3. 1, 2, 3. Okay, I actually posted a chart when this candle was going down in our group, and I said, this is a trap, guys. This is a trap. I don't know if it's a trap or if that's just how the market plays out. But when this came down here, actually when it was here, I said we are going up because this was a simple WXY structure. All right, so when we were buying this, if I put on there, let me get back here. I'm gonna try and get EURJPY, show you how we buy, because this is important when you take these trades. US dollar JPY. This was it when it was still an idea, as you can see here. It was only an idea when we were here. 1, 2, 3, 1, 2, 3. When it was going down, I said, it's going to come down here and it's going to go up. And that's the move that we've got now, because we understand structure and sequence. Right, so clear everything there, go back to the chart. Right, also, this was the actual trade that I showed you. So now it comes down here, and then it starts giving us the structure that we are very familiar with, that we've been discussing. We move up, gives us an impulse. All the boxes ticked, we took the trade. Right, you could have taken it with the 10 lots or 100 lots, depending on what your account is. And this was a perfect impulse. So now what are we waiting for? We're waiting for it to do the same thing again, because the cycle has not ended, and we're gonna keep correcting. We're gonna keep correcting all the way to 150. That's what I'm looking at. Every time I get a correction, be it in the smaller degree or a higher degree, I'm buying. I'm just gonna keep buying. Only time I'm gonna start looking to get out of these positions is when it reaches that level. All right, so that's why your major zones will not be respected when the market is on a impulse. Impulse does not respect these zones. Okay, you only get zones where patterns complete. Right, so let's get on with the rest of the yen pairs. Everything else is just simple. All right, so let's go 4 hour on Chief Yen. Chief Yen, you're almost at this level, so this could be your impulse. This could be your 1, 2, 3. That completes the correction. So maybe now we are ready to get a corrective structure here, which will be the same thing that we're looking for on the euro, because Chief and the euro are correlated. Okay, so just look for a correction here on Chief. All right, AUDJPY. So if you remember 2 weeks ago on the yen pairs, this is what you had. We had this impulsive move up and this corrective structures up, and this move down. And I said, look for correction for a move down on all of them. You'll see as I go through the rest of them. Or if you watch the previous videos, I said we are coming down to this level. Now we are on this level. Watch your divergence. There's probably strong divergence for this to make the move to the upside. That is that pattern of ours. All right, so let's look for a move up on this one. That's Audi. And another one was New Zealand JPY. Also had the same thing. It had this impulse and this correction, became a bit complex. And it was here, we said correction and then a move down. Okay, but this one actually makes an expanding one, but doesn't change anything. We are now getting this structure here. Wait for correction here. If you get a correction here on the 1 hour, you buy. Okay, that's New Zealand, CADJPY. CADJPY has a very nice structure that we've traded. Switch everything off there. We've actually traded this pattern as well here up to this level. Well, the webinars here, I think it was the 18th December. All right, so here's that pattern again. Impulse, pullback, and then it starts slowing down. We traded this. Obviously, you can see that everything has been retraced, but that's okay. What we're anticipating here is that this can do this, do this, do this, and then go test that level first as a first target. So this does not mean anything. We need to see how it's going to play out when it comes to this level. We may still get more upside on CAD. Okay, that's CADJPY. Did I miss any yen pair? I think I've covered all the yen pairs, the pound pairs. Now we do the euro pairs. The euro pairs, pound GBP. Another one that's forming that pattern daily. You can see here we're looking for 1, we're looking for 3, right? Initially, that's what we were looking for. Okay, but right now when we sold it here, we thought this was going to give us a correction for a move down, but it's not doing that. It's giving us an impulse in our favorite pattern. Right, so that pattern that we have, it pulls back with 3 waves, and it's coming down in 1, 2, 3 waves. That looks now to have been completed. It is now reversed. So this is why I'm thinking that we're gonna get possibly a 3-wave move to this level. Okay, something like this: 1, 2, 3. Right, a 7-string sequence up to this level, and this will be a 1, 2, 3, 1, 2, 3. If it goes to that level, and then you're gonna have a flat correction if it comes down for another move higher. So for now, we are here. We are in the trade. We took it last week, Thursday, I think, and some of our traders were asking whether they should hold the trades because NFP is coming. Right, so we've been holding the yen pairs and all these trades from last week, some from 2 weeks ago. It doesn't matter what news comes. We hold as we have set it up. Okay, so if I just go to the lower time frame here, this is where we took the trade, and it's actually nice to take it here. We had a 1, 2, 3. We had a 1, 2, 3 pullback, which is what we like. Right, some can even say, you can see there's also a pattern here. Advanced pattern traders. So don't trade patterns alone without understanding the sequence, because you're going to be wrong most of the time. You can see here there's this nice pattern there. Looks like a Gatli. Looks like a Gatli. Okay, so we're already in the trade. We'll see how it plays out. All right, so you could get 1, 2, 3 and a deeper correction, and then this can just keep on going. All right, so we are in this trade. We took it here. You can't just rush into it. You need to wait for pullback if you want to ride it along. All right, so that's Euro Pound. The rest of the euros, EURAUD. I don't need to say more about this one. This was chart of the week. Please do yourself a favor and watch that chart of the week. I see it only has about 600 views, so a lot of people have not watched it. So go watch it. It will explain what we're looking for here on this one. All right, so initially now here, this is the first target here at this level, because that will be a 1, 2, 3, 1. Let's switch off so we only see the annotation. 1, 2, 3. If this is going to be a regular flat, then it's going to come down here again. But for now, we have taken this one here. Time to take profits. Don't be greedy. Take your profits and wait for a setup. All right, so this is not going to go on forever without a correction. You will get a correction. But if it's a small one like this, then you might need to be careful when it gets to this level. All right, so that's EURAUD, Euro New Zealand. EURAUD, I think there's a note that I made here. Can't remember. I think there was this fractal that I noted here. Let's go to Euro New Zealand. Maybe I'll find it. Oh yes, you see the note that I made here on Euro New Zealand. I'm saying there's a fractal here. So what happens here on the Euro New Zealand? If I switch that off, there's a 4-hour. You see the similarities with the way we took EURAUD. You've got a 1, 2, 3 here, and then an impulsive move and a 3-wave pullback. Impulsive move and a 3-wave pullback. All right, and then you get this move. So we're anticipating that this will now move and give us that parabolic move. But look at Audi US dollar, no, EURAUD. Look at EURAUD. EURAUD. If I go to the 1 hour, it did a similar move as well. You see, same pattern, impulse, 3-wave pullback, impulse, 3-wave pullback. What happens after the 2 impulses and the 3-wave pullback? A parabolic move. Right. Euro New Zealand has not done the parabolic move as yet. It has given us the 3 impulses, but in the higher degree this time. Impulse 1, 2, 3, impulse 1, 2, 3. Now we're anticipating the same parabolic move as EURAUD. That's how fractals work. So we'll be looking at this fractally as well. They are obviously they are correlated. Right. So EURJPY. This is the only one of the euro pairs that does not look very bullish, because we've got a big move down here. 1, 2, 3. Okay, this is the last move down. 1, 2, 3. It looks like it's making a correction to come down here. So I don't know if it's gonna make this move for another move down. Only then will it move to the upside. But what are we looking for here in the short term? In the short term, look for this move here. See if it breaks down to this level. Okay, that's the only one that does not look very bullish of the on the euro pairs. That may be because of the chief, Swiss franc. EURCAD, we're also in the trade on this one. I don't think I showed you this one. And the reason why I am bullish EURCAD as well, if I go to the 8-hour time frame here, I think it will be clear on the daily. Similar to EURJPY, I'm also very bullish this one. We've got 1, 2, 3. We've got 1, 2. I'm anticipating that we're gonna keep getting corrections all the way up until we retest that level over there. Okay. So that's the next target. So that's why even when the structure looked messy, I was still buying, and I was even posting buy setups. We actually bought it from right at the bottom here, together with the Euro New Zealand. So even when it was making this wedge-looking structure here, you know, when it's a wedge like this, we expect that it's going to come break down here, but we actually bought here because every corrective structure we're going to be looking to take it up. See here, corrective structure, we take it up. Every time it pulls back, we take it up. Every time it pulls back, we're taking it up. So next to wait for here, it's whether it's going to give a 3-wave pullback for another move to the upside. So bullish EURCAD as well. Right. That's all the euros. I think I've covered all the euros. Euro New Zealand, EURAUD, pound, CAD, CHF. It's all the euros. Right. So silver. Let's go to the 4-hour. Somebody actually sent me a text saying they took a trade on silver because I said it was going to go to the 18 level. So you need to be careful when you're doing analysis here that there is an idea and there's a trade set up. So you take the trade when it has confirmed all the rules. You don't just take it because the market is going up. Right. So I mean, for example, if I showed you this. Let's look at EURJPY just for example, so that you don't get lost. Even if I was analyzing this structure and I could see and understand every move here. See here, 1, 2, 3. We got this one here. When we got this one, we went down. Okay, I understood this move, but I was not gonna trade within this correction because this will just give you a roller coaster ride of emotions. Okay, you do not trade within the correction. You need to have a buy setup according to the rules that you implement on your strategy, not my strategy, your strategy. Only the guys that use my strategy are the guys that are in our premium group. Right, so let's go back to silver and look at what we were looking for last week. Right, so last week, similar to gold, this is the structure that we were looking for. We had this impulsive move. We were looking at this as a 1, 2, 3. right? So we said when this breaks to the upside, we're going to be taking the trade. Okay, obviously broke to the upside, but it came down and took us out. So if a trade takes you out, you should not be crying about it. It should not have taken or wiped up your account. You should have only been losing only 2% of your account, because this happens. You're not going to be 100% all the time. This is what we're looking at, because this is what the structure was giving us, because we did not have enough information at the time. Right, so what do we have now? Now what we have is the 1, 2, 3, 1, 2, 3. So 1, 2, 3, like that. So we'll be looking to see if this is a three-wave pullback that will go up, or if you're going to get a three-wave pullback. If you get this, then you know that silver will come back down and retest this low. But otherwise, there's a chance that from here, we can even reverse and go retest the level that we were speaking about. So there are a number of alternatives, and you only take a trade when it confirms all the rules. Okay, this is why we will not take the trades all the time. So, and most of the time when the market is doing this here, you can see this a couple of days, it's almost a whole week doing this. You don't take trades here. Okay, that's how you lose money. So let's do some of the New Zealand, not the New Zealand, some of the CAD pairs. New Zealand CAD, I did a chart of the week 2 weeks ago on New Zealand CAD. Very interesting chart this. See our pattern here. As always, if you look at that, you will see there's an arrow there that shows that we bought here and we hit the target. It was 100 pips move, but now it has made another pattern again here. So we're looking to buy it again when it breaks out here, giving us this 1, 2, 3 move. Maybe even come and retest this level here. Okay, so this is actually simple. So talking about this structure again, it's not just a random structure with a lot of overlapping candles here. There is actually a three-wave move if you look closely there. Let's go for 1 hour. That's your impulse down. Okay, then you get your pullback, right? And then you get the one. No. It's clear. You get an impulse down, you get a running flat over there, right? So now you get a 1, 2, 3. So it's an impulse, a flat, and a 1, 2, 3. A, B, C. So you need to understand this structure where it ends. You do not only rely on breakouts. It's not about breakouts. You need to understand when the sequence has ended and the cycle has ended. So you see here it breaks out, gives us a nice flag. We buy for 100 pips. Now it has done this again. Right, so we're going to be looking to buy this one as well. 1, 2, 3. As you can see here, 1, pullback, 3. We have already started. You need to wait for a flag for a move up. That's New Zealand CAD, AUDCAD. Let's go higher time frame daily. All right, so AUDCAD, similar. We've got a 1, 2, 3 wave move down. So some of you may be wondering, why do I cut through some of the swings? There's just not enough time to do all the degrees here. I'm just doing the higher degrees. So if I've done a 3-wave move here, it's not that I'm forcing issues here. You will see that there is a lower degree 1, 2, 3 here. There's a lower degree 1, 2, 3 here. There's a lower degree 1, 2, 3 here. So I'm not just cutting through the swings. I'm just going higher time frame. So you see here on the red degree, you've got 1, you've got 2, you've got 3. This is now reversing, but is it really reversing? This 1. This could possibly give you a 3, which will now start going, and this will be a 3-wave move in the higher degree yellow. See, so we could still be going to retest that level. So keep an eye on this one. Just because you've got a strong candle to the downside, doesn't mean you must sell. You need to wait to see what happens there. Right, so that's AUDCAD. I think essentially covered almost every pair here. that has got a significant trade on it. Maybe if you just look at this one, this is one of the trades that we did in chart of the week, 1 2 3 1 2 3 impulse, right? So we need to see if this is now gonna go up, but that will give us an indication by the type of move that we're gonna get here. If we get a flag here, then it's continuation all the way down. Okay, if you get an impulsive move and a correction, then maybe it starts another 3-wave move to this level. See the two alternatives here. All right, so out in New Zealand is the one that is quite interesting, and I missed. There's a move that I missed here that I was looking at that I forget to take when it played out. So you had the move up, you had a correction here, 3 waves, clear 3 waves. And after the 3 waves, you had a clear regular flat telling you that this is a continuation pattern. So right at the top, we should have taken that trade. Right, so I didn't take that one. But you can't take them all. We took so many trades in the week, so that's okay. So you need to wait for a flag here. But this flag, if you remember the video I did on how to trade XXY like a pro, this should come up to about a 61% extension of the A move, right? So 61, then you get a correction, then you go to the 1,618. Only then will you be looking for a reversal here. You can see this is going down correctively. It's not going in a sharp impulse. So this is a correction. All right, so we'll be watching this one unfold. All right, so oil, if we do oil now. Oil, I don't need to say anything new. I'm still showing the same thing that I've been saying for the last couple of months, weeks. Oil is simple. You've got a swing high, swing low. You've got a 1. You've got a regular flat in there. See there? Actually a running flat with a 3-wave move like that. 1, 2, 3. And you want this move here to come to 68. Then there will be equal here. Then you're going to have your A, B, C, simple with a 3-wave B. So I've been saying every week we do these webinars. If you like trading oil, wait for pullbacks, wait for pullbacks, wait for pullbacks up until 68. We are now at the 68 area around, not exactly there, but it's not safe to buy there because either you're going to get a reversal or you're going to get a bigger corrective structure there. Now you're getting another correction. Yeah, you can see this is not going down, it's going sideways. Right, so the deeper it is, the better for a move up. All right, so that's oil. Okay, so before we do the cryptocurrencies, okay, maybe we should do the cryptocurrencies first. And let me insert my indicator. I just want to put in my MACD there. MACD for C. All right, so we are here. So those that are watching on Facebook, you can subscribe to the YouTube channel. There's a whole lot of these videos that you can watch. All right, so let's look at the MACD there. This is Bitcoin now. We're looking at Bitcoin. So Bitcoin, we've got this impulsive move down here. We've got this wave 2 here. So we were looking at this as a 1, 2, 3, and anticipating that we're going to get a reversal from this area here, because this here would have made a very nice zigzag. But if this becomes extended now, this will be a wave A. If it goes, it will go 1, it will go 2, it will go 3. And the only time we're going to start looking at it as an impulsive wave A is if it does this from here. Okay, I already have it there. If it reaches this level, The only time we're going to label this as a wave 3 is if it reaches the 1,618 of this move extension. Only if it reaches 2,000, then it will be a wave 3. Right, so that is still very far. And we were looking for a reversal, but as you can see on the daily, there is no reversal. I'm going to go to the 4-hour, downgrade the time frame, and see if we've got any reversal on Bitcoin. So where we have reversed now on the blue box, it looked like we only had a 3-wave pullback, because we were thinking that from here, after this 3 wave, it's going to give us another 3 waves, because you need another 3 waves for a move up. But right now, this has reversed deeply, so we need to see what it does. So if it keeps giving us corrections like this and comes down, maybe even come back up here for a flat, then we're going to keep going down on Bitcoin all the way to that level. But that will be on the higher time frame, giving us an A, first A of the corrective impulse. If we do that, switch off. If it gets to that level, that will be an A, and then we'll be expecting a B, maybe even a C. But depending on the type of move it will make, because it may make an A and have a deep pullback, but if it's an A, it's not going to make a deep pullback, because that will not validify the flat correction, so you may get something like this. Okay, so keep an eye on this one for further down, if it corrects. And target the 1,618 area around here. That's Bitcoin. And the rest of the cryptos are playing out exactly the same. This is LITECOIN now. Same, 1, 2. We're looking for this, but this one looks a bit solid. It's not reversing. If you get something like this, then it's confirmation of a reversal. So you buy, unless it's going to be a 3-wave pullback. But you don't miss this, because if it keeps going, then it's going to leave you behind. So you buy, and then when it moves, you move your stop to break even. If it's going to do this, then you're out for no loss. All right, so that's LITECOIN, Ethereum. Ethereum 1, impulse, 1, 2, 3, pullback. As I want to do it clearly. 1, 1, 2, 3, pullback, 1. Clear A, clear B, C. So Ethereum looks pretty incomplete. It does not confirm this to be a zigzag. So it still needs to move lower. So that may drive other cryptos lower as well, before we expect the up move or a reversal. All right, so that's Ethereum. And lastly, we're going to do Ripple. If anybody has a question, it's the time now. You can ask your question. Ripple has got, if I look at it on 4-hour, I'm only just looking at the correction, because I'm assuming that everybody knows that all the cryptos had a parabolic move from right at the bottom. So now we're just looking at the correction. Okay. So then that is how the correction looks. So the parabolic move, you've got a 1, 2, 3, pullback, 1, 2, 3. So we need to see how far this will go. Okay. Here we've got some kind of, we've got the divergence over there. Right, so this is making lower lows, but the indicator has already started an up move. All right, so we need to see if this will break to the upside. When this breaks, corrects, then you buy Ripple. Okay. All right, so lastly, I'm gonna do S&P and the DAX. They made some down moves. 3-wave pullback. So those who like to trade stocks, is your opportunity. Equities to buy now. We've got 3-wave pullback. You should start seeing a reversal here on the S&P 500. Okay. Unless the only time you will not, but you do not just pick a bottom. You need to get confirmation of a reversal, impulsive move up, and then it starts going. Okay, so the DAX is the one that has got a clearer move. If you look at the DAX now, if you look at the DAX on the 4-hour, you'll see that we've got a flat correction there. Doesn't mean it is going down. You just have a 3-wave in between there, giving you a flat correction. We are here now. Don't be surprised when the DAX starts carries on with the up move. You've got a nice flat correction there. That's how it looks. All right, so I think that's all for tonight. Hope you enjoyed it, and good luck for the week ahead. Thank you for attending. I'm going to stop the webinar on all platforms. Look out for my contact details at the end. Thank you. Cheers. Bye-bye.